Welcome to Financial Freedom and Finance channel. Here we upload videos to give you a helping hand in reaching your financial goals. We hope to give you tips for achieving financial freedom using finance one video at a time. If you are new here, do not forget to subscribe to our channel for more videos about financial literacy. The lesson today is going to be the beginner's guide to buying stocks. Find a broker you like as the first step. There are several internet brokers available. There are so many choices, in fact, that sorting through them all to make a solid decision may be daunting. Fidelity, Merrill, Interactive Brokers, Webull, and Ameritrade. Pick your stocks in step 2. It's time to choose stocks after setting up and funding your brokerage account. Investigating the firms you are already familiar with as a consumer is a fantastic place to start. Avoid becoming overwhelmed by the flood of data and real-time market gyrations while you perform your study. It's crucial to keep your goals straightforward. Look for businesses that entice you to buy a stake. Examine the company's annual report, particularly the management's annual letter to shareholders, before making an investment decision. The letter will provide you a ton of information about the company's operations and give the report's numerical data context. After that, the majority of the data and resources you want to assess the company will be available on your broker's website, including SEC filings, transcripts of conference calls, updates on quarterly results, and current headlines. The majority of brokers now offer manuals on how to operate their equipment and even simple workshops on stock picking techniques. Decide how many shares to purchase in step 3. You shouldn't feel under any pressure to purchase a specific quantity of shares or to cover the full position in a stock in your portfolio at once. To get a sense of what it's like to own individual stocks and determine whether you have the strength to ride through the challenging times with little sleep loss, think about beginning small. As you get skilled at stock trading, you may gradually increase your stake. Step 4. Select the order type. Market orders and limit orders are the two order types that successful investors frequently use. Monetary order. By placing a market order, you promise to purchase or sell the stock at the best current market rate. If the amount you pay, or receive, if you're selling, differs from the figure you received just moments earlier, don't be shocked. Prices, also known as bid and ask prices, change regularly throughout the day. Because of this, it is recommended to utilize a market order when purchasing large, stable blue-chip stocks rather than smaller, more volatile ones. There are a few factors to consider before placing a market order. A market order is excellent for buy and hold investors who believe that ensuring that the trade is completely completed or filled is more essential than slight price discrepancies. Your order will be filled at the current price when the exchanges reopen for trading if you place a market order after hours, after the markets have closed for the day. Review the trade execution disclaimer of your broker. Some low-cost brokers group all customer trade requests together to execute all at once at the going rate, either at the close of trading or on a certain day or time of the week. Cut-off orders. You have more control over the price at which your deal is executed with a limit order. Your limit order instructs your broker to hold off and only execute your order when the ask price drops to $95 a share of XYZ stock, which you believe is more in line with how you value the firm. A limit order instructs your broker to sell the shares whenever the bid reaches the level you specify when you are selling. Limit orders are a useful tool for investors buying and selling smaller firm stocks since, depending on investor activity, these equities frequently have bigger spreads. Limit orders are useful for investing when the stock price is more significant than order fulfillment, such as during brief moments of stock market volatility. In order to limit how long a limit order is open, you can add extra conditions to it. Only when all of the shares you want to trade are offered at your price limit will a all or none (AON) order be put into action. Even if the order hasn't been completely completed, a good for day (GFD) order will expire at the conclusion of the trading day. A good till cancelled (GTC) order is one that is in effect until the consumer cancels it or it expires, which might be anywhere between 60 and 120 days or more. Before placing a limit order, bear the following in mind. A limit order ensures the price you will receive in the event that it is executed, but there is no assurance that the order will be filled entirely, partially, or even at all. First come, First served policy governs the placement of limit orders. If the stock remains inside your specified boundaries for long enough for the broker to execute the deal, this only occurs after market orders are filled. Commissions on limit orders may be higher for investors than on market orders. Limit orders that cannot be completed entirely at once or within one trading day may nevertheless be filled over the course of several days, with transaction charges applied each time a deal is conducted. The deal will not be carried out if the stock never reaches the level of your limit order by the time it expires. Learn the jargon in Step 5. Get assistance understanding the maze of statistics and stock trading jargon. Use this cheat sheet of trading words to expand your vocabulary. The price that sellers are prepared to accept for the stock, as requested by buyers. The amount that buyers are prepared to offer for the stock is known as the bid, for sellers. The spread is the price differential between the lowest ask and highest bid. A market order is a request to purchase or sell shares as soon as possible at the best price. Limit order, an instruction to purchase or dispose of stock only at a predetermined price or above. Stop, or stop loss, order, when the stock hits the stop price or stop level, a market order is executed, and the full order is filled at the going rate. Stop limit orders are filled up to the extent that the set price restrictions can be satisfied after the stop price is achieved. Final step, commence stock purchases. Best wishes. You are now prepared to invest. Check out our list of outstanding brokers to get started finding the best broker for you. The Beginner's Guide to Buying Stocks. Fidelity. Merrill Edge. Interactive Brokers IBKR Pro. Webull. TD Ameritrade. That is it for today's video. I hope you were able to learn a thing or two about how to buy stocks, handle your finances, and where you should get started if you want to achieve financial freedom. We will see you in the next video.